Hey, joining our watch party. Starts today. guess it's time to get going now. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. Good to see you. So if you look at the description below the video, you'll see that today we are doing the watch party, the first of 13. We're doing 13 watch parties. You can pay what you want. You just have to be a member of Investor Bootcamp. So some people pay $10, some people kick in 25, 30, 22, 80, whatever you think is right. So pay what you want. That's a pretty simple deal, right? But we are going to go through the entire monetary policy course. I think it's going to be 15 or 16 hours. So it's going to be a lot of work. So that's why we need to do something like this live watch party where we try to make it fun. We do it as a community. We can get together and go through the entire course because we need to know it. And then once it's all fresh in our mind, then in week 13, I am going to then do the new Fed policy framework, which by chance is the topic of Jay Powell's speech on Friday. He is talking to the other central bankers from around the world, the Bank of Japan, the Bank of England, the European Central Bank, the Bank of Canada, so on and so forth. They're all there. And he's going to teach them the new Fed framework, and I'm going to teach you the new Fed framework. And who taught me? The St. Louis Fed. So it's all timely and appropriate. And so, like I said, you can pay what you want. But we are starting this entire process in 3 hours and 28 minutes. With or without you. Yeah. Yeah. I can't trade with or without you. So anyways, cool, right? Very timely, isn't it? Oh, yeah. So today in our Forex.Today live stream, I will be using, okay, so that's at Investor Bootcamp. There you go. I will be utilizing the TRADARS terminal and the Trader's Way execution platform, aka MT4. This is a course. 13 lectures. But that's what it says. Is it a course? Go to the webpage. Old framework, new framework. Look, we're doing this together, so it's fun, but you can also ask me questions in real time. Cool. Is it a course? Well, there's a comprehensive curriculum. Okay, Richard? Week 1 through 3, weeks 4 through 6, 7 through 9. Cool. And then I teach you the new stuff. What's the traditional modern monetary policy framework is fresh in your mind, then I'll teach you the new thing that's happening now. The thing that Jay Powell's talking about on Friday. It's your missing piece. See? So anyways, look, I put some time into this. Yeah, I made this website. Right? So I didn't pay some developer $1,000 to build this website. So that's why I say, look, go ahead. See? And then you go here, watch it. So this is why I can make it super cheap. Sign up here, pay what you want. Cool. Pay what you want, minimum $10. Cool. Okay. Yeah. It's cool, right? Yeah. So obviously, I'm not going to get rich. I want you to go through a 15-hour course again, one that you probably completed 5 years ago. You're like, Wayne, I did it 5 years ago. I don't want to do it again. Well, you need to do it again. And that's the issue. You need to do it again. I know you don't want to do it again. I don't want to do it again. We have to do it again so that we can then talk about something that actually the new framework is much more complicated than the old framework. So if you don't understand the old framework, there's just no way you're going to get the new stuff. So anyways, that's why we're doing what we're doing. Okay? Cool. No, do it now, Richard. All right. So anywho, so this is Trader's Way. I've been working with them, what, 10 years? 11 years? Yeah. Good people. So we're stuck when it comes to the pound dollar. We're stuck between a rock and a hard place. The lower low predicts a lower high, but now we've had 100% pullback. So now what? Well, it really depends on where you think we're going to go long term. And then, of course, when we're going to go there. So this using a daily chart here. And so what I'm trying to say in so many words is, you know, this lower low predicts a lower high, which predicts a lower low. And that hasn't happened. So now maybe this is much more of a higher time frame where you have the higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, three-wave correction, and then game on again. Now, seasonally, this is normal, and then this is normal. But not everything looks like this. Part of this move is the realization that the Bank of England cannot cut. Well, when they cut, it weakens. So if they can't cut, then it's a policy change, right? And sometimes not cutting is similar to raising. Because what happens is people priced in the cut, then they find out, wait, they can't cut again. So now they have to unprice it, which looks like a rally. But nonetheless, this could fall for quite some time and then rise. Now, I did this last week, almost a week ago. I drew this. So a week ago, we were here. And I said down. Why? Because it meant up. And so now it'll fall for a week. Great. So it's fallen for a week. So I think up because it's been down. You're like, wait, what? Yeah, well, you know what? You have to think ahead if you're going to be a trader. If you're going to be a bull, you have to think ahead. If you're going to be a bear, you have to think ahead. If you're going to be a bat, not necessary. You're like, Wayne, I've heard of bulls and I've heard of bears, but I've never heard of a bat. What is a bat? Well, Don, it's just what this chart says technically. So in a way, it's more like, um, and by the way, we're talking about the Bank of England, not about the Fed. So that's just what it says. That's right, Jim. A bat is a broke ass trader. And of course, they don't need to have opinions. They don't need to think ahead. They can just react and be late to everything or early for things that never happen. Whatever. They're chasing a mirage, right? Yeah. So anyway, so going back to Don Pablo, I'm like, uh, that's just what this chart says. So I'm just reading the chart. That's just what it says, and then you can read into the chart and say, well, what's going on there to make traders do this? And that's much more subjective. So I'm reading the chart like a concert pianist reads sheet music. I can play Beethoven and Mozart, but I'm not Beethoven or Mozart. I can just play it. I didn't write it, but that's what it says on the piece of paper. This is what it says on the chart. And then I can I can have some poetic license and say, well, how do I want to hold each? How do I? Okay, like piano forte. Okay, there is no such thing as a piano. There was a harpsichord, and then there was a piano forte harpsichord. Loud, soft. Well, Dre, they cut interest rates. What do you think? Right? You know, Dre. So anyway, so the poetic license here is I have to play the right notes in the right time. Um, but I can press the keys hard or soft, make it loud and soft. Some, it's like auditions for a movie. You give every actor who's auditioning the same scene with the same lines, but you watch 50 actors come in and they each do it differently. The same words. And so I'm there, but that's subjectivity, right? So what I'm doing here, Don, is I'm like, okay, this has gotten strong. What would describe the scenario in which this would occur? Because when we look at some of the other pairs, we don't see this behavior. So I'm like, well, what would explain that? Okay, well, right now this seems to be very much related to the pound. What's going on with the pound? Well, they have high inflation and low growth. Oh, well, they're stuck between a rock and a hard place. So they're kind of neutral now on their monetary policy, maybe. And if you had thought cuts were coming, then now you're priced in further cuts not coming. And that would make sense and describe our observation. So in that case, what do we do here? So a week ago, I said, well, it made a higher high, so obviously it's going to fall. You're like, wait, what? Yeah. Now, does this mean up? No. In my book, I say this is fair market value. I have no idea if it's going to go up or down at that point. And then this pattern, it's true. Now you can say, well, wait, it's obviously a three-wave correction. Well, I didn't know that at the time is all I can tell you. But 100% retracement from this to this, okay, is not bearish. So, and then I see maybe changes in sentiment towards the pound or to the dollar, but I think it's more pound related. And then I'm like, well, if we were going to do this technically, okay, I think we're going to be, at least for now, in a small range, maybe between now and the end of the year, a higher high, but at the very least, technical analysis just dictates this. And I think it would be great if it did that, but there's no way I can predict the second part. That would just be hope and want and praying and guessing. But what I can tell you is this to this makes sense. But it's not my opinion. That's just how to play Mozart. That's what it says. All of it. Technically, fundamentally, it says everything. That's right, Dre. That wouldn't make sense, would it? Okay. Yeah. But like, why would you? Well, let's do something basic. Okay, I'm with you, Dre. Hang on. Let's do something basic. We can do. How about the here and now? Like, what are you going to do today? Okay, let's do this. Great. So Kiwi's weak. Why? They cut interest rates last night. Makes sense. So if you don't know that, that's. And I'm not saying that's you, Dre. I think you know that. But I mean, dude, if you don't know that they cut interest rates last night, you're not a forex trader. I don't know what you're doing. You really? Okay. And then here's the pound giving back. So now, Dre, pound Kiwi wouldn't make any sense right now. Aussie Kiwi wouldn't make any sense right now. Euro Kiwi would. Okay. Kiwi Swiss franc would. Kiwi CAD would not. Okay. So what I talked about yesterday and even the day before. Let's see. Let's see if it's on these. Kiwi Swiss franc. So this is the plan we've been on for a long time. And in fact, we're hitting our target. Straight out of our day trading group. Right? Straight out of our swing trading group. This is a monthly plan. And this is the follow-up. So the actual target now, the new target, okay, and again, straight out of the training course. Right there. That's what it says. It's not my opinion. That's what it says. That's how Mozart wrote it. Those are the notes. I can play it note for note. That's it. Derek, it's open to all members of of Investor Bootcamp. So let me bring it back. Bring it back to me. Okay. So I'll just show you. It's so easy. Okay. Log into your membership at at Investor Bootcamp. If you don't have one, or if it expired, I would assume everybody here is already a member. I mean, it's $88 a year for like 100 hours. I'm like, my goodness, you don't have that? I mean, so I'm assuming you do. If you let it expire, just renew it. It's $88. It's not the end of the world. Okay. But when you log in, Watch this. Boom. It's right there. Okay. It's 100 hours of training courses, Sebastian. Yeah. So this is where you sign up and you pay whatever you want. Minimum $10. Buy me a beer, a wine, a whiskey. Yeah, and you're like, really? Super premium cigars are $100 each? They can be as $300 each. You're like, really? Yeah. InvestorBootcamp.com. Actually, I'll do the watch party one. Here's the. Yeah. So, yeah. So, anyways, there you go. So, yeah, that's starting like in 3 hours. Cool. So, anyways, this goes back to Dre. Huh? Such a good day. Didn't even need an AK. Cool, right? Yeah. So there you go, Dre. But this has been in the works for a very long time. Not just yesterday they cut interest rates. So let me try to quantify that. All right, let me try to quantify that. Fundamentals, central banking, and we look here, and what does this say? We have New Zealand as being the most dovish, aka interest rate cuts, of all the central banks in the world. And we've known that for a year and a half to 2 years, quantitatively. Wait, what? Really? Yeah, we've plotted everything out fundamentally, including their glide path. So we already knew this, that the cut was coming in the third quarter. This wasn't just updated. No, this is what it's been. So what do you read here? Well, let's follow that up. Bum bum ba, bum bum ba, bum 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 bum. Here. Okay. Boom. This is it. We already have this priced out and planned out. In fact, just I think yesterday or the day before, we talked about this orange line being the new target. Look at this. So explain this. Explain this. Okay. August is bearish for the stock market, which pushes yen pairs down. Okay. That happened right here. Wait, on the first day of the month? Uh-huh. Okay, great. Then it had a huge drop, and then it did a pullback, which we call the lower high. This is called a bearish selling zone, which we had since here. But we also know New Zealand is going to cut the most and weaken the most, and we know yen is going to raise interest rates. And so this is the biggest loser, but we've known that for like forever. Okay? And so that should be clear. Look at all these tools. Yeah, yeah, yeah. So, you know, yeah. Now, seasonally, things often turn. Okay? right? You see? So, like, it's going to be down forever? I didn't say that. Seasonality will change, but you probably won't buy kiwi yen because this is most likely a dog with fleas. But how about, okay, sell this down to here and then buy euro yen there? Did you check seasonality? See, you should be able to think weeks in advance, guys. I'm talking 6 weeks from now. But it could be today when the Fed meeting minutes come out. It's going to be right after our watch party. It could be Friday when it comes to the Jackson Hole speech that is about the new Fed policy framework, which I'm teaching. And we're starting in today's watch party. Maybe we'll do another watch party on Friday and watch the Jay Powell speech together. Would anybody be into that? Yeah. What if you had to pay $10? Yeah. How funny is that? Huh? Pay what you want. Yeah, it should be different, right? I should do one where I'm like, hey, pay what you want, minimum $1 million. But pay whatever you want. It's just minimum $1 million, right? Because somebody said, it might have been you, Jim, too, right? You're like, I only want to pay $1, but it, it forces me to pay 10. And I'm like, oh, well, touche, right? No, I don't think so, Don. No, I don't think so. No, in fact, Don, if you go back and watch the annual outlook, I think it's quite spectacularly on point. Because what I discussed is it shifts. So maybe, I mean, kind of. Well, when we do live events, you can ask questions, Sebastian. But other than that, no, it's $88, right? Channel for communication, what, for $88? No, I'm not going to, I don't have time to sit on the website and answer questions. But 100 hours of videos is totally worth $88. Yeah. 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 No. Yeah, it makes sense, right? Yeah. All right. So, anyways, there's that. You know, I know this is all Captain Obvious type stuff, but I'm just showing you that you have all this data at your fingertips. Like, you didn't know Kiwi Yen? Really? Wow. Really? Look, Kiwi Yen. You don't really? Wow. Seems like you should know. Yeah. All right. So, you guys ready to do a Fast and Furious session? Oh, and just while we're at it, look, if you're like, Wayne, I'm a trader. I have $200, but it's still a lot of money for me. But I take trading seriously, and I have a live account, so I'm trying to make money as I trade. And, um, well, if you're in that situation where maybe you've been trading for 3 or 4 years, you're still not kind of where you want to be, but you see the value here. Um, you should trade with us. The process will be you trade on an MT4 account. You'll get all my charts. You'll get an equity bonus. And you'll get a spread rebate. And if you trade enough, I'll give you a rebate on your subscription as well. And for some people here, they don't pay any, well, they pay their $200 a month. They get a spread rebate. And then they get $200 a month PayPal back to them from me. And so actually, if you think about it, if they're getting a cash rebate on their spread and a $200 rebate for me, it's like free. And not even free, they're actually turning a profit. But I won't say that too much because you might have to declare that on your taxes. So shh. But this should be cheap and free for you. Yeah. This should be cheap and free. That's how much I want you to have it. Because I already built it, bro. So let's go.
U.S. President Trump calls on Fed Governor Cook to resign.
WTI crude oil range bound as peace talks ease risks, but supply concerns linger. Canada new housing price index year over year fell from previous 0.8% to 1.4% in July.
Crypto becomes an integral part of sports. New B2B and Pay report reveals growth in trends. Wall Street poised to open in negative zone.
Trump Cook must resign now. Luxembourg jobless rate remains stable at 5.9%.
Canada new housing price index for July, 0.1% versus 0.2% last month.
Canada new housing price index, MOM, came in at 0.1%, below expectations, 0% in July.
Indonesia unexpectedly cuts interest rate.
Oh, Indonesia cutting interest rates. Oh, my goodness. What are you doing, Indonesia? But anyway, so while we've been talking, Canadian housing came out. It's not traditionally a big deal. So, but the thing is, they missed the mark. The way you use this is while you're trading, you just have this running in the background. So you just open up your Squawk Box, what we call the headline radar, and then you just minimize it. Okay? Right? So, for example,
U.S. President Trump calls on Fed Governor Cook to resign.
WTI crude oil range bound as peace talks ease risks, but supply concerns linger. Canada new housing price index year over year cool, right? Fell from previous 0.8% to 1.4% in July. So the tagline is, hey trader, have you heard the news? And so while you're trading, you just run it in the background. And you don't have to take your eyes off the charts, and you constantly, every few minutes, update it. Now, it's new headline about stuff we care about. So now you don't have to read the news. All right. So anyways, that's how that works. Make sure your bias is correct. Okay, great. And so we're right now in the sell zone for Bitcoin. Okay. And check this out. Lower low, lower high, lower low is probably the near future, huh? I'd like to pick it up around 100K. Okay, look at that. Just riding the moving average. Just great. I'd like to pick it up around 100K, but I think we're going to need some time. Like it'll take, it might do it closer to September, I guess. So this is the target. And it's going to take a couple of weeks. Right on, Sebastian. Yeah. No. It's 365 days. Right on, Sebastian. Welcome to the team. No, it's 365 days. It's not till end of December. Yeah, I wouldn't do that. Yeah. So maybe we'll do a watch party on Friday too, huh? That might be fun. So why don't we do that? If you're part of the live watch parties, which is reviewing the monetary policy course lecture by lecture, well, we know there's a big monetary policy event happening on Friday. So it seems to me it fits in the course, doesn't it? All right. So, bonus. We just decided bonus, free bonus for everyone that's in the watch party. It's investor boot camp. All right. So, everyone that is a member of Investor Boot Camp, yeah. And then you sign up for this. It, right? And you can pay whatever you want as long as it's more, $10 or more. Um, we'll do a watch party. Everybody in this course. We'll do a watch party and we'll watch, assuming that it's on. See, I think it's going to be available, right? Somebody's going to have it, right? If somebody has it, like Bloomberg or CNBC, BBC,
Gold rebounds as U.S.
I can
dollar
cover
weakens. Trump calls for Fed Governor Cook's resignation.
right? But it probably is on YouTube, is what I'm saying. So we should be able to watch it together. I don't even know what time that is, but my FX Street presentation's at 7:30. I think that's too early. Okay. Yes, everything, all the watch parties will be recorded, but only available to those that have paid to join the watch party. Yeah. So there you go. So anyway, so Friday's Jackson Hole speech, okay, is going to be a free bonus, assuming, like, I don't know if it's 9:30 at night. In that case, no. But look, if it's sometime a reasonable time on Friday, we'll do it, right? Yeah. Oh, yeah. Sebastian's going to watch the recording of people watching a recording live. And if you record that, Sebastian, then someone else could watch a recording of you watching a recording of us watching a recording live. It's going to be epic. Yeah. Right on, Sebastian. Cool. So, anyways, that's what's happening today. Nothing's right up torn. All right. So we'll go back here. Yeah. Don't forget, we have CPI out of Japan, and then retail sales out of the UK. Cool. Is anything actually moving? We know fundamentally the markets suck right now. So is anything happening? Yeah, maybe some breaks and breaches. Okay. But none of these are trending. You see, like we're at support. Oh, this one broke support. Yeah, see, look at Kiwi Yen broke support. Yeah, sell the rips, dude. Kiwi CAD, sell the rips. So Kiwi clearly the thing to do today. But the news came out like 12 hours ago. Yeah, that is right. That is right. And we covered the Kiwi Yen angle of that. And we've also covered the fact that Bank of Japan is going to raise interest rates. And so that makes sense. We've also covered the fact that that would be a normal thing to, like, the yen's strong. Let's see if we get, let's see if my mind agrees with the data. Seasonality. Mm-hmm. Yeah, it's totally normal. You see, here's the peak and should fall. And as we approach September, rise back up. But as far as Greg's like, yeah, yen's strong. Yeah, yeah. Well, this is what we're talking about. Kiwi yen. If you look at, okay, the 20-year average and the 5-year average, we peak in June and we trough in August. So what happens from the July to August period? Down. And then a change in direction coming soon. Yeah. Today doesn't seem so, right, Greg? But maybe sometime soon. But the thing is, Kiwi may not be the right play. So you extend your analysis further and you're like, well, what about Euro yen? Okay. Okay. Euro yen usually doesn't take off until the closer to the end of September. Oh, wait. That didn't pull up properly. Euro. I'm like, really? There you go. That makes sense. Okay, Euro yen. Somewhere around the end of August to November. So the way I look at things, Greg, and I think you do too, but I sit there and I look at the yen pairs falling. And I'm like, yeah, they're falling. Yeah, they're falling. Yeah, they're falling. Meanwhile, I'm thinking about this. And I say, well, what time? Well, somewhere before September 1st, often. But definitely by the end of September. So we're approaching that line now, that first. Okay. And by the way, I covered this in my third quarter outlook that I did weeks ago. I covered this in January. I covered this every year. But in particular, in the third week, the third quarter outlook, I talked about the variables to say, well, if we have a window of time, okay, the beginning of September, the end of September, we talked about the variables that would indicate this goes up at the beginning of the window or at the end of the window. And so over the next several weeks, I wait for this to turn bullish. And do I hold for 2 hours? Do I hold for 2 days? Do I hold for 2 weeks? Or do I hold for 2 months? At least 2 months. Okay? Oh my goodness, huh? Yeah, okay, like setting up a buy grid. Yeah, I guess it depends on the definition of a buy grid, but building a basket of yen trades. Sure. Sure, I got you. That's fine. I don't think you would be hurt by using a stop loss. So the word grid I don't like, and then no stop loss I don't like. But in general, I think I know what you're doing, and I don't disagree with it. And usually that works. There's been a few times in the last couple of years where it totally collapsed on us, and that's very, very disappointing. Yeah, yeah, yep, 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 yep. But the thing is to know to do it, and of course, if now I think Greg's been trading for decades, and I've been trading for decades, so this just inherently you figured out that this is how to trade. But if you don't have it inherently, we have it quantitatively. And so you know when to start buying, see? And you know when to exit, right? So what's the assumption? How do you read this? Okay, somewhere around here is a buy, somewhere around here is a peak, somewhere around here is a buy, somewhere around here is a peak. And the gray line is, because that's what, see, these are 5 and 20-year averages. So they don't change that much. So, right? So down, down, up, 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 up. Oh, you mean this is what happened? Yeah. Then something unique happened. The stock market crashed. But then we got on with it. And where did we peak? Right where you'd expect to peak. And then it's come down right when you expect it to come down. And now the next thing is, yeah, it's coming down. Great. So it's the end of the world, right? No, probably in the next 1 to 5 weeks, it's going to return up. It could start today on the FOMC meeting minutes. It could start Friday on the Jackson Hole speech, or it could start September 17th, because that's inside the window. But the thing is, if you're not ready for this, now we can have massive disappointment. FOMC doesn't clearly show that the Fed wants to cut. Powell doesn't hint, and then September the Fed doesn't cut. Well, that all of that is unusual. That would not be normal. The all-time average and the last 5-year average doesn't have 100% Fed cut priced in and then no Fed cut. And that has to be unwound. Okay, and this pause here is the Fed cutting. So don't don't be shocked if we're disappointed if they end up not doing it. That would be abnormal, but at least you know it's not normal. Is that right, Greg? Yeah, I could see that. I mean, there's different strategies, but I know you've been around, so you figured it out. You've tested things that work and don't work, and that's the best outcome. I don't like it, and I wouldn't recommend it, but it doesn't matter, right? It's all good. So I agree with the strategy, maybe the technique, but again, doesn't matter, does it? Right? It's risk on or risk off. So how about this? The Fed cuts. Let's try to draw this. Okay, Fed cuts. What happens to the U.S. dollar? So Fed cut. What happens to the USD? Up or down? Down. Okay, Euro dollar. Up or down? Up. Okay. Now, do you think it's a random consequence or do you think it's actual money? The Fed cuts. Do do Americans buy some BMWs and Porsches, Ferraris and Lambos? God forbid a Volkswagen. Is it real money, or is it like Euro Kiwi, in which there's there's no real money going from Europe to New Zealand and back, but the Kiwi can be strong or weak in general. That's why I create indices for these things. So I create an index for Kiwi versus everything, Euro versus everything. So if Euro is strong versus everything and Kiwi is weak versus everything, Euro Kiwi moves a lot, but no money is actually flowing from Frankfurt to Christchurch. They're just relatively changing. So, anyways, I think real money actually flows. The interest rates get cheap, the economy expands, Americans feel good, their mortgages are coming down. You can get a lease for cheaper. So basically, Porsches and BMWs and Mercedes get cheaper. So they buy some more. The dealers sell their inventory and they call Germany and they're like, send us some more Mercedes, BMW, and Porsches. And money flows from the United States to Europe. What happens to Euro Yen? And we're not even calculating what the yen's doing. So in a normal scenario, risk on creates a weaker yen. Now, maybe it's not going to perform as well this year because, well, Japan's going to raise interest rates. You're like, wait, what? They're going to raise interest rates? Yeah, don't be surprised. Here's what they have projected for interest rates and when they're going to do it. So they're going to raise interest rates soon. Then they're going to pause and they're going to raise again. So how about December and June? Wait, what? Okay. Wait, what? Yeah, we already know this. Dude. So they're going to wait to December. Do you know why? They want the yen rally, just like Greg does, the yen pair rally, just like I do, just the way you do. They want the big rally. And then when everyone should be taking profit in December, they're going to jack up interest rates. And the yen will get strong, but not until we've sold the heck out of it. We all made our money. We all take profit. The yen gets strong. Then they jack up interest rates. The yen gets strong, but we're already out. And everybody made their money, including the Bank of Japan. Yeah. So anyways, golly gee whiz, isn't it nice to have all this data? So anyways, oh, David's already gone. Right, that's today. So David's already in his session. And then I guess I should probably yeah, that's today, right? Yeah. So Peter's also got one today too at 2:30. Wow, it's going to be busy. He did, but he didn't do it here. Yeah, Greg, that's what I said. I knew you did it through quality analysis. Yeah. Yeah, I got you. Um, one of the things I learned in the algorithmic trading program at Oxford is in scenarios like that, be sure that you have a kill switch. So it's like one of these things, like, and I don't know if back testing will help with this, but okay, so for the last 20 years, Japan's been cutting interest rates closer and closer to zero and then actually negative. Great. So out of those 20 years, it's been very rare that Japan has actually raised interest rates significantly. There have been times, but let's just say it's rare. So you can back test and say, well, for 20 years in a row, you made money. But it comes at the consequence of volatility because some years it doesn't work as good. Well, right, because there's uniqueness in those years. And I was there when those happened, and it might have been when they did raise interest rates. But most of the time it works just right. And some other times there's some vol with it. So you're like, well, then it takes me out of all my stops, and then it continues in the general direction. And you're like, okay, so you remove them. And so for 20 years in a row, you made money. Sometimes with too much vol, but generally speaking, it always works out. But then you find out the next 5 years are going to be completely different monetary policy out of Japan than the last 20. And so now you go into it with no stops, and this year's different. And instead of the yen's all, skyrocketing like they have done year after year after year after year, they totally collapse. And you're there with 100 trades all going negative on you and with no stops, and your EA popped them all in there long only, and the whole thing collapses this year. Now, I don't think it's necessarily going to happen that way, but the risk is that, 20 years in a row of up, this year's down, and you're white. So how do you then manage that? Okay, fine. Have a kill switch, which is similar to having stop losses. So then I might argue we'll just have a stop loss. And you're like, well, but then they underperform. Okay, well then what if you cut your lot size per trade in half and double your stop? Or cut it by 66% and increase it by 300%. And then you're like, but then I make money, but the absolute amount of money made is tiny because they're such small trades. Well, then you would be focused on when you're wrong, not to add, but when you're right, how do you compound? Right? That would be my only advice. Because, I've been in the same situation, right? Yeah. Yeah. Hey, man, it's a complicated business. And there isn't a right way. There's a million wrong ways, but there's no right way. My take after more than 20 years is combining fundamentals with technicals, being a macro trend trader, and trying to combine short run with long run. So there's what to do today, sell the kiwi. What to do the next quarter, sell the yen. And everything in between is tough. But I love it. So anyways, last chance. Here we go. We're 2.5 hours away. I will see you over at Investor Boot Camp. This is your last chance to sign up. I'll give you the link one more time. This is your last chance. Also, if you're watching a recording and you can't click that link, look in the description below the video that you're watching and it'll have the link. So peace on earth. May the pips be with you. May your profits be above average. I'll see you at noon. That's 2 hours and 28 minutes, 26 minutes, 28 minutes. Peace on earth. May the pips be with you. May your profits be above average. I'll see you soon.